Hey everybody, it's Pete. Good morning. How are you today? Got a lot to talk about today. Thanks so much for joining me on Stocks for Breakfast. We have electric vehicle battle today that we're going to review. We're going to talk about Lucid. We're going to do some chart reading on Lucid. We're going to talk about the IPO yesterday from Rivian, which was actually pretty interesting to watch. We're also going to talk about the market. We're going to get a little bit into exactly which stock picks I'm watching today. We're going to talk about sector rotation, how some of those on the bottom have now ran all the way to the top. We're going to talk about how healthcare has just pretty much plummeted to the bottom. Probably not shocking actually right now, but as was mentioned here in the chat before, there is one healthcare stock that we're looking for a two-step entry into that first piece and then second piece if we break through. We're also going to talk about a stock that is up 27% after earnings, has more upgrades, a little bit more upside excitement to that stock. And we're also going to talk about some metaverse stocks today, which have been pretty interesting. So we're going to have plenty of stocks for you to consider buying today. And we're going to finish that off with a part of a coaching call last night where we did a deep dive into risk reward and the big difference between whether or not you can afford the risk versus whether or not that risk is worth taking. So we're going to talk. We got a lot to cover today. Stick around. Make sure you have a notepad and make sure you watch this video more than once. We got a lot to cover today. Okay, so as with everything we discuss, everything here is for educational purposes. It's up to you to make that final decision. It's up to me to help you make better decisions. That's really what I love to do. I just want to make sure I say hello to everybody today. John Weinberg, good morning. How's it going, pal? Hey, Larry, nice to see you here today, Larry. I love that hat. John Bates, good morning. Good morning. Hey, Min, how's it going? Who else? Hey, Abe, how's it going? Good morning. Good morning. All right, Barry, good morning. Barry, I answered your question this morning in reference to those scans that you had asked for last night. So I just want to make sure that you understand where to grab them inside the education portal. And yes, Barry, that's actually a very good point. Happy Veterans Day and massive respect for everybody that fought for our freedom and fought for our ability to actually do this right now. So we're going to get right into it. We're actually going to hop right into what we're going to watch today. We're going to start out with the market, because we've been spending a lot of time on the market and this bullish move, bullish move, bullish move. And then what happens if we go into a change of trend, how to recognize that change of trend, and then which stocks should we be looking at if we get into a change of trend. So we're going to start out with the market so we have some context for everything that we do. And then we're going to hop right over into looking at the charts of Lucid and then the IPO of Rivian yesterday, which was pretty exciting to watch, actually. So we're going to zoom on over and take a look at the market right now. One of the things that's been going on in the market, especially over the last 5 or 6 weeks, it was just absolutely on fire. And look, let's just face it, we were kind of due for a little bit of a pause. We're finally getting that little bit of a pause. And now it's a potential change of trend. So I want to be clear, we are now, anytime that you're in a move to the upside and move to the downside, in this case, you have to assume it's going to remain in place. You have to assume that order flow is still present and pushing in that direction until you see a reason to say, nope, it's not valid anymore. Now, what's kind of cool about this is you can see the uptrend that we drew basically from middle of October. So basically a month, basically a 4-week uptrend. A couple of days of selling, 4 days in the SPY that closed below the open. Yesterday pushed down. Pretty good day to actually start looking for new longs today. We're also going to talk about Tesla and the $5 billion worth of stock that Elon Musk sold. So anyway, what we have right now is what we've been calling the right price. And I just want to give you like a little bit of a heads up on what we're looking at right now. This area, recognizing this area in the program, in the boot camp, we call this a potential change of trend. And this is where money goes to die. If you don't recognize these kind of price action movements, where you have obvious order flow, you break an obvious downtrend, you break an obvious trend to the downside, but then the market recovers. So actually the futures are actually up a little bit right now. So we're kind of stuck in the middle of that box. So right now in the market, we are bullish, however, with a potential change of trend. Very big difference from where we're just going well bid, well bid, well bid, day after day and week after week. We can get in there with big position size. We actually had a comment here this morning in the chat. Who the heck? I think it was Miles. I just want to go back to it because I think it's pretty important. He was talking about, I just want to find it because it's pretty important. He was talking this. Okay, so Myers typed this in here this morning. Yesterday was tough, but I found Lily to come through for me for a small win. Every single day we talk about risk reward. Every single day we talk about getting in there and making as much money as possible when the market's great. However, yesterday we also mentioned that a big part of making money is understanding how to not lose it so that you're not digging yourself out of a hole when the market's obvious. And we kind of saw that with the price action. If we kind of zoom this over here, this price action versus this price action, if you were diligent with your position sizing here, when this happened, you were making money as opposed to digging yourself out of a hole. So Myers, I just want to say really good job paying attention to that yesterday and finding some pockets of opportunity. Probably our biggest winner yesterday was actually in Tesla. It formed one of our top new setups that we're looking at. We call it a snapback trade yesterday, met all of the criteria. Tesla and Starbucks, actually, both of those were the two stocks that met the criteria. Starbucks didn't follow through as well, but Tesla was just an amazing trade. We actually had a few members of the community yesterday, Stephen Williams being one of them, and Marissa, unbelievable job in the community yesterday. I think both of them made over $40 on the setup yesterday. You could actually see the entry. You could see the technical setup of where it came from. So again, big part of trading is being prepared before the market opens, which is what we spent a lot of time on yesterday. So I want to get into, we're going to actually jump right into, so we have a potential change of trend in the market. Two big levels now to pay attention to for this week. And the question that comes up is, how do we recognize when it's okay to start being bullish again? How do we recognize when we should start to size up, which is kind of the opposite of what Myers just talked about before, which is understanding when to pull back. And it really comes down to Monday's opening price, which is all the way up there around 470 again. So that means today, Thursday and Friday, we're just kind of trading the longer term bullish action. But this week, so far, we're dominated by selling, even if you go back to last Friday. So you got Friday, Monday, Tuesday, Wednesday, all selling. So it's kind of interesting to see if this push and a pause is going to lead to new all-time highs. Now, the big thing that's separating today from the last couple of days is the sector rotation. So if we do a little bit of a deep dive here, and let me just move over on the side here, you can see that some of the stocks that were near the top of the list, such as technology and specifically consumer cyclical, they were 1 and 2 there for a while, have just absolutely kind of melted down. Technology still in the top 5, but not nearly as strong. You can see for the last 5 days now has not performed at all. They're kind of actually going sideways. But what's interesting is, as Myers pointed out before, and John A. was also talking about, we're going to take a look at healthcare, one healthcare stock in particular, which is Lilly, how to manage that. We actually talked about 2 different setups on that. We're going to walk our way through giving you some stocks in the industrial sectors to take a look at today. But we're actually going to start out taking a look at what we promised today, which is Lucid Motors. Lucid Motors has actually been on fire recently. Anything electric vehicle pretty much has been amazing to be trading over the last, let's say, 4 to 6 weeks. So we're going to take a look at the short-term and longer-term trade in Lucid Motors. We're also going to hop on over into the Rivian IPO yesterday and see what kind of price action we had there yesterday as well. One thing I want to point out that I actually found fascinating. Again, Rivian's brand new, but the part that I want to take a look at here, let me actually make this a little bit bigger because it's really something to think about. And it's more of a business strategy thing, which is right here. Something that is super interesting about Rivian is they basically have built on a skateboard platform, which allows future vehicles to be adopted by other companies. Can you think of another company, one company that did something similar and exploded to be the top company in what they do in the world, probably as a matter of fact, the company that I'm talking about right now is the largest company in the world right now. They actually passed the multi-trillion-dollar level again, all because they opened up what they did to allow other people to use their platform. Can anybody think of who I'm talking about right now? That skateboard technology in their cars is a pretty interesting deal. Can anybody think of what other company did that and exploded because they allowed other people to write for their platform? Horace, exactly. Microsoft. Think about what Rivian is doing, and I think it is brilliant. I think it is absolutely brilliant that they're going to allow other companies to hop right onto their chassis with this new skateboard technology, and that should allow them to explode because it's not going to be limited to just what they can produce. they're going to be producing the chassis for all of those other cars. Pretty interesting. Pretty interesting. That is something to keep an eye on. Now, obviously, the Rivian yesterday and the IPO. We're going to start out with Lucid and the longer term, but when we take a look at Rivian and we start to break this chart down, which again was only yesterday's price action, this is going to be very fun for us to watch as a community to see if that underbelly of the car catches on and becomes something much bigger. And I think just as importantly, much faster. I think that's what's going to be the exciting part of it. All right. So as promised, we want to get into Lucid and take a look. So Lucid, obviously another electric vehicle car. You know, it was something interesting that I read yesterday. They were talking about because Rivian debuted, that's why Lucid went down yesterday, which is not the case at all. Lucid is high-end electric vehicle cars. Rivian is pickup trucks right now. They're not. It's not the same car. So anyway, getting into this, we're going to start out with a little bit longer time frame and then work our way down to what we're looking at today. And actually, John actually posted that this morning as well. This is literally one of the pauses that we look at. Remember, we mentioned it yesterday. We make money during the push, but we manage risk during the pause. So right now, we actually have a pause in Lucid. So I'm watching Lucid pull back right now. And if you remember that scene in Trading Places, we're like, okay, buy him, buy him, buy him. So now we're looking to initiate the first piece of a new trade in Lucid, looking for it to actually make a new move higher. So we're going to start out with some higher time frame analysis here, which again, you can see the stock doesn't have a lot of history. So the two things that are obvious here. Number one is September and October were two really good months in the sense that they were both bullish and that they closed near the highs. September was what we call a bullish U-turn. And then October traded into well bid, closed near the highs, but closed a little bit off the highs. Now, what's interesting about November so far is right now we're trading into a melted candle. And a melted candle is when you get a lot of price action and the open and the close is relatively close to each other. So this is a big deal because now we're forming if-then scenarios like we've done with a lot of the stocks that have reported earnings this week, where if this happens, that means this for me. If this happens, then I plan to do this. So because the higher time frame right now in Lucid still looks good, but the current month is showing indecision, that means that position sizing needs to be lower on your initial share size because it's not as obvious as it was during September in October. So think about what we're doing. If it's our job to piggyback the smart money, it's our job to spot those footprints when it's obvious, and then we can get in there. Right now, it's less obvious. It's still well bid. Remember, well bid means higher highs and higher lows. So in that sense, smart money for November is paying higher prices for Lucid stock. They are also holding higher prices from the low from October through November. So in that sense, it's still well bid. But digging deeper into the tape, remember, there's three pillars that we work on. Stacking the order flow, which is what we just talked about. Number two is tape reading, which is we're talking about right now. The tape is less obvious than what it was. The open and the close for November right now, it's only a week and a half, almost 2 full weeks, is less obvious than it was before that. So now we have a mental model of, okay, I want to be a buyer of Lucid right now, but because the tape in November is less obvious, they're not supporting it above the opening price as well as they did the last 2 months. I still want to be a buyer, but I'm going to reduce my initial share size. And then if it pushes and pauses, during that next pause, I could initiate a trade. So if we put the first piece on today and the buyers continued not to step up for this month, we'll only have a small piece on because we're waiting for feedback. This is smart trading. This is how you position yourself where if it moves against you, not a big deal. You recognize the tape and the order flow. If it moves in your favor and we get feedback, then we start to add to that position. So what do we want to see? We want to see the distance between the November open and where the last price is. We want to see that change. We want to see that grow more green. Now let's work our way over into the weekly chart. So we already know the expectation. This is where the hard work is in trading. Think about it. We just outlined a complete trading scenario in Lucid before the market even opens. This is what I want to inspire you to do. This is what I want to challenge you to do is think about all this before the market opens. Don't just say, oh my gosh, AFRM is up 27%. I need to be a buyer of it today. That's not enough. That's only one layer. You need to go and build that argument so you have conviction. So your account goes like this, steady month after month after month. But that only happens if you put in the work like we're doing right now on every idea that you're looking to trade. So now we're going to work our way over into the Lucid weekly chart. And now what's going on here? So we had well bid, also well bid, but a melted candle, but also closed near the high. So melted candle meaning a small body. Now this week we have what's called a bearish U-turn in Lucid. So we actually traded up, came back down. We're now below the opening price for this week. We're also below the high from last week. So do you see how we're putting together the pieces here where on the daily chart, it's telling us we could time an entry long in the direction of the bullish order flow, but the weekly, the monthly, and the daily chart are all telling us it's less than perfect. So that means we have to pull back our share size on our initial entry, and then we would look to scale up if price action does something very specific. So what is that? So now we're going to take it even a step further. This is where you really start taking those notes and you're like, all right, now I got the next part. So the next part is, what would we need to see to add to our Lucid trade if we initiate the first piece today? So now we're mapping it out. We're scripting our success long before it ever happens. So the next step, again, we need to know the price. We need to read the tape. We need to know exactly when and where. Well, this weekly chart's giving that to us already. So now we know that we're going to go over and we're going to put a line in the sand, which is the opening price for this week. If this week right now is trading into a bearish U-turn, let me actually make that a little bit bigger so you can see it. If this week right now is a bearish U-turn in the context of longer term bullish order flow. So we have a bearish reversal pattern versus a longer term bullish order flow. So that just smart trading says it's a conflict, but still obvious bullish. So we can dip our toes in on today's price action, and we won't get into the exact price right now because we have to do that when the market opens. But that price right there, what's the exact price? 43.54 is where the alert set. So you now set an alert at 43.50, 43.25, maybe just below that. Say, okay, the bullish price action for this week is not only well bid, but now it went positive from Monday's opening price. Now we got a little bit more room to breathe, and that's the price that we would consider adding shares. So if we go back over to the daily chart now, the whole trade is mapped out. We already know now what we plan on doing. If we're looking to be a buyer today, we look to put our first piece on now. If the stock reverses, and here's the thing, closes above that price, then we would look to consider adding the next. Now, you might want to say, because we have a conflict on the weekly chart, we need that weekly chart to go well bid and hold that price. You might wait maybe one more day just to see if it got above and pulls back. But either way, this is the exciting part about trading. And this is why I say the trading part of trading is easy. We just mapped everything out before it even happens. It's this work that we're doing now that is what makes you a great trader. This stuff is what gives you 100% unshakable confidence when the market opens, because it doesn't matter what the market does. You already know what you're going to do before the market even opens. This is where you separate yourself from I'm struggling to read the charts and make money and everything looks confusing, from I know exactly what I plan on doing before the market even opens. And that was actually what we did in Starbucks yesterday. That's what we did in Tesla yesterday. And we have roughly 9 stocks that meet that same snapback criteria today as well. Actually, OSTK is another one. I'll just go over that one pretty quickly. OSTK meets the snapback criteria as well. You can see a little bit longer term order flow. You can see a little bit of a pause. You can see a bearish U-turn into well offered, into closing on the lows. Now we have certain price action that we're looking at for OSTK today. We actually wanted to open lower and then look for our entry based on what the snapback trade is. So this is really where, again, if you want to elevate yourself when that market opens, you know exactly what you plan to do. It's not, oh my God, prices are all over the place, or, oh my God, what did Jim Cramer say I should trade today? No, you need to know before the market opens exactly what you plan to do, so that when the market opens, you're sitting back, you're like, all right, hit that price that I'm looking for. Only then will I get in. That's how you have conviction. So that's how we're looking at Lucid Motors. We just broke Lucid down. You might want to watch that again. We just went from today's price action back out to the monthly, to the weekly. We put in chart patterns that tell us whether it's bullish, how long it was bullish, what it needs to look like for us not to be bullish anymore, what it needs to look like for us to again be bullish, and put the first piece on and size up. Just do me a favor, type in yes if you think you could follow that structure. Type in yes if you could think that you can go from a monthly chart and say, okay, I understand it's green, but not green by that much. And now let me look at the previous month. Okay, it's well bid as well. So buying over 2 months, but not as strong right now. Okay, I understand that. That's going to set my expectation for share size. So just let me know. You think you can start to do that? It's like start with the monthly candle. What does that look like? Okay, you know what that looks like now. How does that monthly candle look compared to the previous one? Is it inside it? Is it well bid? Is it well offered? Is it green? Keep it simple like that. This is where I really want to keep things as simple as possible for you, that you go market opens, you can make absolute conviction that you know what you're looking at. Then after you have your analysis on that monthly chart, then you move over to the weekly chart like we just did in Lucid. So we'll walk over to that one again, just to give like the real breakdown on what that weekly chart looked like. So we said energy candlestick, right? But then melted candlestick. So, all right, melted candlestick means indecision. Did all this trading and opened and closed in almost the same spot. So indecision, but closed at the high of the range. So indecision, still bullish, but I want to see the next candle follow through. So remember, if this happens, then I plan to do this. The next candlestick actually did open higher, which is that red one, but immediately traded down. So like, okay, that's not what I wanted to see. So do you see how you could save money just by not putting on a trade unless it does exactly what you want? So we went into that week, and let's actually go right here. And I'm actually going to make this a little bit bigger so it's easier to see. If this week finishes, you're like, okay, great. Big energy candlestick, a little bit of selling during the week, but by the end of the week, it fought its way all the way back to the high. So going into next week, this looks great. As long as it stays above this high, which makes it well bid, and stays above the opening price, I'm going to confidently look to buy that stock and stay long that stock because it's doing what I need to see to have bullish conviction. So now we go out to the next one. And so far, the week is not doing what we needed to see. So do you understand, like, are we starting to put the pieces together where what happens versus what you need to see needs to be in sync in order for you to have conviction when you place that trade? If you know what you need to see and that's not happening, stay in cash. As Myers said about a half an hour ago, like at the beginning of the call, stay in cash. That's what real trading is. You keep yourself out of harm's way and you only accept risk when prices are doing exactly what you want them to see. Which kind of brings us back to a lot of these stocks, and we'll use Peloton actually as an example, where members both here and in other communities are, I want to buy Peloton. I want to buy Peloton. Well, how could you build an argument right now by saying Peloton's a great idea? It's not. You're guessing. Stop guessing. There's absolutely no reason to guess. Our job is to piggyback what's obvious. Our job is to say, wow, smart money is paying higher prices for that. Let me find a spot to piggyback. That's only the first part of what we do. New York method is stacking the order flow. That's the first part. Reading the tape is kind of what we touched on a little bit today. And then the last part is risk reversal, which is actually a part that I want to get to today because I want to show you something that we discussed in last night's call. I'm going to actually make this a little bit bigger because I want to talk about this right now, this is actually from our coaching call last night. You can see a bunch of the topics that we discussed, but this is what I want to talk about right here. This was a question that was brought up by Juan last night. A trade with correct risk, but unreasonable reward. Okay. This is what I want to talk about right now. Correct risk, but unreasonable reward. This is huge. Juan called the trade out yesterday, and the difference between his stop loss and his entry price was okay from a chart perspective. But this is what we do in the game plans. And this is why the game plan meetings that we have just before the market open in the boot camp are by far the most valuable part of what we do other than these coaching calls. Juan called the trade out and we started to discuss it. And I said, Juan, I understand your entry. I understand your stop loss. But if that's the risk you're taking on that trade, what is acceptable reward that's likely in order for you to take that risk? So in other words, if you're risking 10, you probably want to see at least $20 or $30 in profit on that trade. this particular stop loss that Juan had picked was far too wide for the potential of what the stock normally does. Uh-oh, that's the alarm. We got 5 minutes. All right, so we got 5 minutes. I want to bring this home. So when you place your next trade, I want to challenge you. I want to challenge you to think, okay, if I accept risk of $5 or $10, whatever the dollar amount happens to be, and you're willing to risk a certain amount on that trade, ask yourself, what is the likelihood of me making enough money to take that risk? Now, that means you have to look to the left a little bit and see what the stock normally does. You have to look to the left and say, well, okay, the stock is flying right now. It's been up 6 days in a row. I know I can only risk a certain amount of money right now based on my account and all that kind of stuff. But what are the odds of me making money for that risk? So we actually talked him out of the trade because the setup was good, but the reward that was likely did not make it a good trade. So again, pick a side, pick a spot. We had those two things down, but the profit potential didn't make sense based on what the stock normally does. That's where you save money and don't even put a trade on, and then you allocate that to a different, better idea. He had like 5 ideas that we talked about yesterday. So I want to challenge you. Before the next trade you put on, ask yourself, is it worth taking this risk? Because if you're taking trades where you're risking 10 to make 10, that makes you a break-even trader. And that's probably why you're struggling. Because quite honestly, if you know what you're looking at and you can find everything on the charts, but you're not making money, as we say, there's a gap between where you are now and where you want to be. All right. Again, we cover all of these in the boot camp. This is obviously from last night's coaching call. If you want to learn about it, click down below. You'll find it in the description. I'd love to see you in the boot camp. But my point is this. If you're breaking even, it's because your risk reward needs work. That's the challenge. Remember this, and this is something you want to write down. Break-even trades make you a break-even trader. Write that down. And if you're smart, if you know everything about trading, if you know everything about every chart pattern on the planet and you're not making money, it means that you're a break-even trader right now, and you need to work on your risk reward. You need to work on reading the tape. You need to work on spotting obvious order flow like we did in Lucid today. You also need to know what it needs to look like for the right share size prior to putting the trade on. How soon do you get to full share size? That's a question you need to ask yourself too. Write that one down. Based on the chart that I'm looking at, how fast do I want to get to my full share size? Is it on my initial entry? Is it like we looked at in Lucid right now where we know we want to work our entry because of how we read the tape? This is what makes trading exciting. This is what makes trading fun, quite honestly, because now you're in charge of the whole process. Not I hope the market moves in my favor. Not I hope an algorithm takes over the stock and moves it in my favor. You are in charge of the entire process. And that's what I say. And now Jason Miller's here with us today, and Jason's a member of our boot camp, was a member of our boot camp, and absolutely grateful that Jason has been a part of our community. This is what separates somebody who wakes up every day, can't wait to be in front of the market. And when the weekend comes around, you're like, oh my gosh, I can't wait for the weekend to be over because I can't wait to trade on Monday. The reason you feel that way is because you know what you're doing, not because you can forecast what's going to happen next. Nobody can predict. It's our job to pay attention to what's happening and piggyback. But it becomes a lot more fun when you're in control of the process and you are no longer hoping that the market does something. Big difference in the experience of trading. And that obviously you can see this is just last night's call. That was only last night's call. We covered all of those topics last night. So again, if you want to learn about the bootcamp, click the link below the video. I'd love to see you there. So I want to get into some more. We actually promised some industrial stocks that we're going to take a look at today. So let's actually hop on over and work our way into some other ideas. So some of the ideas that we're looking at heading into today, we're going to start out with BLDR. And again, you can recognize the patterns that we're talking about, right? Really good longer term order flow. This was the box that it went into. It broke out of the box, and now big bullish gap that's paused for a few days. So we're looking for bullish follow through. So again, what we're focusing on right now is we are looking at industrial stocks, which have migrated their way up the top of our sector rotation. We did mention there's only one healthcare stock that we're going to look at today, which was Lilly. Again, a two-stage setup where this bottom is now the first step, and the second step would be a close over that 275 level if we climb our way back up there. So now we're also going to talk about some recovery stocks in the industrial sector. Let me just pull that out. So you can see how we worked the chart in UAL a couple of different times, went down into a box here, broke out, failed again, and now pushed up again. So we're looking to find a buying opportunity in UAL, looking for it to push back up to 60. Johnson Controls is another one near a breakout level. So one thing that should be very obvious right now, some of the stuff that we're pointing out right now, I'm not looking to bottom fish anything. I want to see where the smart money is already doing obvious and then take that second step and time entries and have the right position size with the right risk reward. Think about all the stuff we're doing right now. Could you imagine how much easier your trading is and will be and could be? Visualize the market opens and you're just like, all right, I know exactly what I plan to do because I wrote it down 2 hours ago. That's where trading becomes fun. So we're mapping out the trades first right now here, finding the order flow. So the next trade we're going to look at after Johnson Controls is Fedex. I actually liked Fedex yesterday as a buy. It was actually showing some really nice signs of pushing and pausing off the lows. Looks like it's up $1 this morning and has already filled this gap right here. So we're looking up at the 248 level. So no, I'm sorry, 270 level as the next level that we're looking to see it push up to. BE has also recently paused. So we're going to keep an eye on BE, which has pulled back a little bit. Our old favorite, General Electric, has big news this week and now finally got above that 106 level. We're looking for General Electric now to find buyers again today as well. And I want to finish up with Honeywell. Honeywell, actually, you can see now a push and a pause. Next level up there is around the 233 level. So almost $8 or $9 left on the next trade. And a stock that reported last week that is still needs to get above this 91 level is RTX. So I actually have an alert set for 92 because I want to see it get through this level. The only other one that I want to point out today, as we mentioned before, actually a couple of them, AFRM. You can see here it's actually up 27% after earnings. We've actually seen upgrades put on the stock at 175 and as high as 200. They basically, you'll see them on a lot of websites right now. They also have deals with, I believe it was Amazon, if I'm not mistaken. They do the buy now, pay later thing. So they're actually a pretty popular company right now. Unity Software had just an absolutely amazing reversal yesterday. And by the way, this is a really good example, Unity Software, of why we get new members come into the boot camp and they're like 6 o'clock in the morning. They're messaging me on Discord because, yeah, we start working at 5 o'clock, 6 o'clock in the morning. That's how early we're in there typing to each other about where the price was at 6 o'clock in the morning. And I'm like, let the stock open first before we make a decision. Stock opened lower and then proceeded to rally almost $30 off the low. Let the market open first before you start making those decisions. Don't make trading decisions based on 6 o'clock in the morning. Another one that we want to keep on, let's actually go back and we'll take a look at a couple more. Costco and Walmart are two that are pausing. They're not industrial stocks, but there's two stocks that I'm looking to find buyers today as well. One stock that I am also looking to see, Bitcoin right now, if we zoom back here and take a look at that, Bitcoin's kind of stuck right now. So we actually drew this box where it rallied, had new highs, broke this trend. So now this is a pretty wide box. So right now for Bitcoin, we're kind of trading day to day, maybe even week to week. You can see 1, 2, 3 melted candles before it took off again. Hopefully this is kind of exciting now. You can spot energy versus melted candles. You should be able to see that right away. So the next big move for me in Bitcoin is I need to see it get through that 68 level with conviction, which means that Mara, which has been the biggest stock that I've been trading, I'll look to still actively trade this, but I won't be building a position in this until I start to see some form of a short-term reversal, which we might be getting here with it up $2 higher this morning. Covered a lot of stuff today. Hopefully that you went bar by bar with us when we did that Lucid multiple time frame analysis, I guess you would say, but we call it stacking the order flow. It's one little tiny way of stacking the order flow. And then we have the rest of the power pyramid, which is the market, the sectors, the industry groups, and the stocks. And we do that for every one of those. So if you could imagine, we just went over the stock. If we'd learn and show you how to stack the order flow in the market, in the individual sectors, in the industry groups, and then into individual stocks, you just have absolute confidence in what you're looking at because you did the work before the market opens. So this is a pretty exciting way to attack the market every day. But more importantly, once the market opens, we're really just sitting back looking for entries because we already know which stocks are the best candidates for that day. So I want to thank you so much for being here with me today. It really means a lot to me that we can spend 7:30, 8 o'clock every day, Monday through Friday together, because I hope I'm adding value. I hope I'm shaking the tree a little bit for you to make you really think a little bit deeper on some of the stuff you're doing right now, and that there might be a gap between where you are now and that absolute unshakable confidence in what you're looking at. So if you want to learn about the bootcamp, click down. It's not a subscription. It's 30 days that we trade together. If I provided some value for you here today, if you could do me a favor, just smash that like button and hit subscribe. I'd really appreciate it. All right. Have an awesome day, everybody. I have to head over to the other meeting. I'll speak to you soon. Thank you, everybody.